A new car it is, and you are very delighted, happy, and excited about it. You cannot even wait to insure it. You go to Britam Insurance Firm and insure it comprehensively for the full value, which is 1 million Kenya shillings. Then you say, wait, I don't really trust Britam 100%. Let me take the second insurance cover on my car. So you go to Jubilee Insurance Firm and you take a second comprehensive cover on your car. And you say, but I can still do the third cover. So you go to ICEA Lion and you do the same thing. Now, the $1 million question is, if your car is stolen or involved in an accident, which of the 3 insurance firms would be responsible to compensate you in full? And the answer to that question is none of them. Before I explain why, this story is very similar to another biblical story where there was a woman who was married to 7 different men. And a question was asked, when this woman died, which of the 7 men will be their husband in heaven? And Jesus answered it very well. None of the 7 men will be the husband to this woman. And similarly, in terms of insurance, when you double insure or triple insure, thinking that you will get full compensation from each and every insurance firm, you will be very shocked. The insurance contract is not supposed to profit you. It is neither supposed to reward you, but to restore you to the same financial position you were in before the loss happened. So the 3 insurance firms, Britam, ICEA, and Jubilee, they will share your claim equitably, which means the insurance firm that you paid more premium to is the one that will contribute more to your claim, and the one that you paid the least premium to will also contribute the least to your claim. You will not get 1 million from insurance from Britam and another 1 million from Jubilee and another one from ICEA, and that makes you to have 3 million. No, this is because insurance arrangements are not supposed to profit you. You can never profit from a loss. This story reminds me of a story about a hyena that fell in a pit. And then there was an antelope that was passing by. The antelope heard the hyena crying and came to rescue the hyena. Once the hyena was rescued, it wanted to eat the same antelope that had rescued it. And the antelope made a lot of noise. Luckily, there was a lion that was passing by. The lion came, listened to the case, and said, for me to make a judgment about this case, can you guys demonstrate what had happened before I came? So the hyena go back to the initial position, and the antelope pretend you are passing around the pit. And when that happened, the lion told the antelope, can you just go? And the hyena was left down there. So the lesson was, you cannot profit as a hyena by eating the antelope that has rescued you. The work of insurance is to protect and restore you to the same position you were financially before the loss, but not for you to profit from it. Let me ask you a question. Assuming for this good car, the car worth 1 million Kenya shillings that you have just bought, you decide to insure it for 3 million Kenya shillings instead of 1 million, saying that in the event that it is stolen or it is involved in accident, then I should earn or be compensated 3 million Kenya shillings. Would that happen? Of course no. When you over-insure your assets, whether it is a house or a building or a machine, in the event of a loss, you don't get compensated the sum insured, but you get compensated the value of the being which you have suffered a loss on. So when you insure more, you double, you triple insure, or you pay more insurance, you pay more premium, can exaggerate the value of your asset. That is wrong, and you benefit from that. Actually, it is a loss that you are incurring and causing to yourself. The question would be, when an accident happens, you only get compensated for the financial loss that you have suffered. You don't stand to profit in any way. This is very similar to another principle of insurance, which is referred as insurable interest, that you can only insure something that would cause you financial harm in case it was damaged or it was lost. You cannot insure something that you don't own. You only insure something you own, and to the extent to which you would suffer a financial loss if it was damaged. Nothing more, nothing less. But there's an exception to this rule, and it is the rule. It is about when it comes to insuring life. If you want to insure yourself for 1 million Kenya shillings, for 10 million Kenya shillings, for 100 million Kenya shillings, and whether you want to insure yourself with Britam, with Jubilee, with the ICEA, Lion, Sanlam, and other insurance firms, as many times as possible, you are allowed to, as long as you are able to pay the premiums that are related to the same. Go ahead and do that. Why? This is because human life is priceless. It's not like the life of a goat or a dog or a sheep. It is priceless. You are allowed to insure yourself for whatever amount of money, as long as you have the capacity to do that. So, the next time you are taking an insurance cover, just make sure that and understand that insurance is not a lottery ticket, but it is supposed to give you a safety net, so that in the event that you suffer a loss, it will restore you to the same position that you are in, not to profit you and neither to reward you. So insure wisely and understand the work of an insurance is to protect you and not to reward you. When you know better, you certainly are supposed to do better.